Hello and welcome to the day ahead. It's Tuesday, January the 10th. I'm Andrew Gagan. Well, global stocks have rallied to their highest level since mid-December. Investors have been buoyed by China's reopening, while Treasury yields drifted lower on expectations that the pace of rate hikes will slow. On Wall Street, the Nasdaq rose with big tech and growth stocks leading gains. Apple, Alphabet and Microsoft all lifted as Treasury yields fell. Amazon jumped after broker Jefferies said it saw cost pressures easing for the e-commerce giant in the second half of the year. Tesla shares accelerated after the EV maker indicated customers in China are waiting longer for some versions of the Model Y, in a sign that recent price cuts have boosted demand. US-listed shares of Alibaba rose on news that Ant Group's founder Jack Ma will give up control of the Chinese fintech giant. Retailers Macy's and Lululemon fell heavily following subdued forecasts. And Goldman Sachs is reportedly cutting more than 3,000 employees, which would be the largest layoff since the 2008 financial crisis. Well, the US dollar has fallen to its weakest level in 7 months against the euro, with the market betting that signs of economic weakness will prompt the Fed to slow the pace of rate hikes. The Australian dollar, well, it initially rose around 1% to 69.5 US cents. It has since come back, but that was its highest level against the greenback since August. Treasury yields fell on expectations of a pause in interest rate hikes, the 10-year falling to 3.5%, the 2-year, which reflects rate expectations, down to 4.2%. Meanwhile, Atlanta Fed Reserve Bank President Raphael Bostic has said there's broad agreement among policy members that monetary policy is currently at a restrictive level, saying, given the amount of uncertainty that is out there, I think it's appropriate for us to be much more cautious in terms of our calibration. The Fed benchmark rate is at 4.5%, with San Francisco Fed Reserve President Mary Daly saying a half percentage point interest rate hike or a quarter percentage point increase are both possibilities at the next meeting, saying, I think something above 5 is absolutely, in my judgment, going to be likely. Well, the local share market is set for a negative open this morning. ASX futures currently off just over 0.1%. Oil prices are up more than 1% after China reopened its borders, boosting the outlook for fuel demand, with Brent crude at close to $80 a barrel. Copper prices have hit their highest level in more than 6 months on improving demand, while a lower US dollar reinforced positive sentiment. And the dollar's weakness has pushed gold prices to an 8-month high, with spot gold at $1,870 an ounce. And positive investor sentiment has flowed through to the crypto market, with Bitcoin now trading above 17,000 US dollars. And that is your day ahead. We'll see you again tomorrow.